Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, things are happening. Let's go analyze them. Let's go to supply first in Manhattan, 7,243. Show me that chart.
Yeah, overall supply remains on trend. It's a lower trend, but it's sticking right pretty much exactly to where it was last year, Noah. So 3% change on the week, 0% change on the year, as we're pretty much exactly where we were last September.
Yeah, the story is not supply. Supply is just doing a seasonal thing. This is what's supposed to happen. If there's a macro thing going on supply, we're not going to find that out until late October, November, when supply is supposed to turn around and go back down. So if we do different things, then we could talk about something happening. But for now, it's doing exactly what it's supposed to. So it's a non-event. Let's shift over to things that are events and things that we should be looking at, which is pending sale about to break that three handle, Johnny, 3017. Show me that chart.
Yeah, the password is demand. So here we are down another 6%. And really, we're watching this pending sales chart in real time sort of slowly shift back to where it should be,
Yeah.
going back to its historical norm. So we had a whole bunch of recovery sales that have been populating this chart. They're making their way out of that chart, and we're kind of resetting at these new normal levels. And the question is, if you can look at that 2020 line, are we going to stop there? Are we going to go down to 2019? Like, where is it? Is the answer somewhere in between? We're not quite sure. We probably have an answer by the end of October, early November, though.
Yeah, that's definitely going to give us more clues, John. But I just want to take a different look at pending sales. And I'm clicking on this UrbanDigs chart. And I'm going to go ahead and I'm going to add some channels because I like to see things and kind of see where the support zones are on the up and the downside. And I kind of put it this way. And you could see when you do this, you could see the COVID downside. You could see the recovery peaks over here. You could see the 2015 peak over here. Obviously, those are good sell signals right over there. But I want to point out what you said. And this is definitely a reset that is going on right over here. And
Mhm.
we're basically taking out all of the recovery level activity out of pending sales and replacing it with post shift level activities. And as time goes on, that's going to be a notable thing. And this could probably fall below this line before it starts to turn around and normalize back into its normal range, we're witnessing it in real time right now. And if you're a buyer, you kind of want to buy when this thing is falling and right about when it's going to turn around. So we got to
Right.
keep an eye on this thing and see what it's going to do, and we'll talk about deal volume on a more weekly basis in just a minute. Let's go to the weeklies right now and start with supply first. Johnny, I'm looking at supply, 451 things. Is that going down? Show me that chart.
Yeah, it's going down. That's roughly a drop of 21% from last week. And usually that pop in the fall happens right after Labor Day. That's what we had here. We had a pop after Labor Day, and then it sort of fades every week since then. So we're in that fade period now. And again, there's a lot of stuff happening on the sidelines, the world of macro, the world of credit, equities, what have you. So that could affect the situation clearly, going forward. But right now, supply on a weekly level remains on its declining trend through the fall.
Yeah. Yeah. And again, so if I'm a buyer right now, I got to keep an eye on the fact that this is not seeing aggressively swelling inventory, and these supply numbers are not suggesting anything that's going to tell me that supply is about to pop in any meaningful, sustained way. It's just doing its seasonal thing. Let's shift over to demand. Contract signed 1 week. That's up a little bit, 168. Let's remember, this is supposed to be the most sluggish calendar year month in September. So that's going to be low. Johnny, show me that chart.
And you are right, it is up a little bit, and it's up as little as you can get. It is up by one contract signed since last week, so it's essentially unchanged. And Noah, you're right. I mean, if you look at this contract sign chart, we are well below last year's level, and we're way back to 2019 levels, which 2019 was somewhat of a normal year when you look at historical averages. So in that sense, right, the demand has shifted to sort of
That's what I'm
back to
that's
a
what I'm
normal
wondering.
season. Yeah.
That's what I'm wondering about, John. That's what I'm wondering about. Because when I go to 1 month, okay, and I look at where we are right now, again, 727, we are supposed to be in the high 680s. That's what September is. So right now, right, any way you slice it, we are above. We are above the seasonal average in terms of contract activity. However, this includes some stuff from August, and it's a slower month. So as time goes on, that's probably going to tick lower, which brings me to your contract signed differentials chart, which is taking this
Mhm.
into account. What we're really looking at is how many contracts did this industry produce on a monthly basis, and was it above or below the historical average for that month? And if it was
Right.
above, it's going to be a big green bar. And if it's below, it's going to be a big red bar. And I want to point out where we are right now. I mean, this is where we are right now. So, like, we are expected, that's expected to come in a little light if we extrapolate out the rest of September, based on our research, Johnny. We're going to come in just below the historical average. What happens then is really going to dictate what type of season this is going to be, John.
Yeah, no, that's an excellent point because I mean this is really going to set the stage for the spring season. So we're kind of getting into like 4D chess here. But I mean, listen, we're coming up on October, and it's seeming to be sort of a slower season. We have some macro issues on the horizon, so we're not quite sure how all of this is going to play out. Right, we still have to look at the off market because if we have some macro troubles, usually the first thing that's going to spike is that off market number.
Mm-hmm.
So looking at this contract sign number now compared to what we're seeing on the weekly level, the monthly level, right? It's pretty much on trend. But again, the trend here is very tenuous and it could really break either way.
Yeah, and that's what I'm looking for. If you look at July, look at that bar in July. You see how that's the biggest bar? We have stated July was that fear-based month. And then we kind of saw a bounce back in August and then a little seasonal tick down in September. That's exactly what that is. So I am curious what happens in October and November. And you know what? Looking at what's going on with macro right now, I wonder whether or not we are going to even hit the seasonal averages. This might be a slower season, but it hasn't happened yet. So let's see what's going on there. And I want to point out one last thing. If I go to the market pulse on UrbanDigs, look at how close we are to the buyer's market threshold, to the neutral zone, to the buyer's market. And look at that shift going on right over here. And that's basically because supply is ticking higher as the listing wave comes in and pending sales is going lower because of what we talked about earlier today. And that combination is sending this down. This is supposed to fall until about mid-October. It's very, very possible in the coming weeks, this is going to go into buy side territory. Are the buyers listening? Buyers want to buy when it's a buyer's market. Are they
Mhm.
listening, Johnny?
Yeah, that's a great question. The other side about it is, I mean, think about the market pulse, how it's going to move into and out of a buyer's market. It's going to go down to the buyer's market, then eventually it's going to shift up and come out of a buyer's market. The key to being a successful buyer in a buyer's market is buying on that downslope, right? That's when
Right.
you have the most negotiating power. It's not when the market starts, when that pulse starts coming back up, you've already lost a little bit of that edge. So yes, there's a lot
Yeah.
to be fearful of right now, right? You look at what's happening in the markets, you look what's happening, in credit spreads, you look what's happening, here, just a kind of a slower market. So there's a lot to be sort of nervous about. However, the forces right now are more in your favor than they have been in quite a while.
Yeah, buy when there's blood on the streets, right? You want to buyers want to buy low and they want to and sellers want to sell high. Well, buyers, you're going to have that again rare and unique leverage opportunity. We've spoke about it months ago, and again, this is where buyers need to be all hands on deck. Thank you, Johnny, for pulling up all this data. We're going to help you navigate through this cycle down. I promise you that. I am Noah Rosenblatt. We're both from UrbanDigs. If you guys got questions, we have answers. Just visit our forum right over here. And if you want any of the reports that John whipped up today, it's going to be right over here in just a few seconds. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.